Hello and welcome to this stock analysis blitz for Cohort. Cohort are a FTSE listed defence company, and they're a conglomeration of 7 different businesses which are actually all allowed to run fairly independently under the Cohort group. Before I continue, please remember this is for entertainment purposes only. Business reports under 2 sectors: sensors and effectors and communications and intelligence. Within sectors and effectors, we have 3 businesses: Chess Dynamics, Elax and C. Chess Dynamics contains all kinds of products that can be used for the tracking, detection, and even countering of missiles and drones. They have surveillance, fire control. They have these positioning systems that can be used to direct a turret towards some kind of target. And they also have counter unmanned aerial systems products. When I looked at their operating profit by each business segment, we see that the chess business unit has been underperforming. And even in the latest half yearly update, they use the words weak performance. So, although they do have products that seem to meet what we're looking for, someone investing into defense stocks, these products are only actually a very small part of their business. So be very wary of that if you're investing in Cohort for those reasons. Elax Sonar are all kinds of sonar related products, and they've had some orders in for the Italian Navy. And C, they have a anti-sub sonar product which is called Crate, but they also have this Ancilia product, and these have actually been adopted by the Royal Navy. And they're able to detect incoming missiles and then fire flares at them or infrared decoys. In full year 24, there was a lot of profit coming from this business, with actually C being the largest contribution to their profitability. MASS are all kinds of support services for the UK Army. They do service contracts with and things like secure data management, and also run massive training simulations. So this business gets a lot of steady work out of the UK Army, and it's actually their biggest revenue generator. And so this does provide the communications intelligence segment with a nice steady earner. EID is military comms, and they have actually won a contract to support the Dreadnought submarine projects on the Royal Navy with this product. So that is actually rather significant order. But in terms of profitability, this segment's been kind of bumbling along. And then they have surveillance technology with MCL and electromagnetic solutions, which are actually naval terminals for satellite communications. So in terms of their product offering, the bulk of their excellence really is in naval products. And although they do have some anti-drone stuff, we've not really seen traction for that yet. So that's something to be definitely aware of. In terms of revenue by geography, just over half of their revenues are in the UK, with 28% in Europe and 18% rest of the world, which is mostly Asia. They actually have very little exposure to the US, but that's probably not that bad a thing, because Europe and Asia are kind of areas where we're seeing increased spending. And I think it'll be easier to sell products with allies in these parts of the world. They've got a extremely impressive order backlog and order intake, and their net income looks like an excellent trend. In terms of their balance sheet, just eyeballing it here, you can see they've got not very much debt. In terms of short-term assets and liabilities, it looks like a very healthy company here, with more coming in than going out in the short term. So looking at their profit and loss statement, and we do see here a nice trend of the income going up. Their cost is going up as well, which if you were to double, would be quite a lot more than what we see here. I suppose the admin expenses aren't going up so badly. I've got together a kind of rough breakdown of these operating costs, and of course it's mostly, and also like with the other companies, it's mostly cost of inventories and staff costs. But actually we do see a nice overage of revenues versus these costs in this graph. So here I've got the overall net income history, and actually this is looking better than the other defence companies I've been looking at. And there's a nice trend of a widening between income and expenditure, with net income, as you can see, sloping up nicely. And this net asset history graph also shows a nice widening between assets and liabilities. So there's a fairly good increase in net income here. And these are really good trends. When I look at the long-term assets, we see that quite a lot of their long-term assets is actually goodwill. And as you know, I'm not really a great fan of goodwill because it's where they've overpaid for companies that they've bought out. It's a measure of the expectation of growth within those companies above what they're currently worth. So it's a little bit of a ropey metric for me, but it doesn't dominate so much compared with some of their peers. In terms of long-term liabilities, and they have hardly any debt at about 11 million of long-term debt. So actually, really quite nice books here. And then in the short term, all their current assets are inventories, 70 million trade receivables, and 75 million cash. So that's a very nice setup there. And it's impressive how you can see the cash here stacking up. That's definitely a sign of a healthy company that's doing well. Then on the short term, it's mostly just trade payables, which is overwhelmed by their inventories and trade receivables combined. So yes, definitely out of all of the defence stocks I've looked at so far, they've clearly got the most healthy balance sheet and set of numbers, a great net income history, piling up the cash, very healthy balance sheet. Here I've got my graphic for their market cap versus certain metrics like their net assets. I kind of don't like how we're racing away here. They're not as cheap as they were a year ago. I did a crude valuation of my own where I estimated that over the next 10 years they're worth about 700 million, which would actually have them as severely undervalued. For this, I assumed that their sales would plateau after about 5 years. Now, that's a kind of wonky calculation I've done just using concepts I understand. But in terms of the cash flow based models, Grok has it valued at 478 million, and the analyst consensus is about 572 million, which would both have the share price currently either well priced or 23% cheap. Most of their profitability at the moment comes from these long-standing mass contracts with the UK Army, which is stuff like training and communication and secure communications and data management. That's kind of boring stuff, service-based stuff, but it's actually the bulk of their profitability. And then where the growth has been is actually been in naval things related to sea power, particularly stuff like sonar radars. But with their Ancilia project, which is being adopted by the Royal Navy to protect against missiles, also a significant contributor. But overall, they're more about the Navy and some kind of Army support stuff. Although they have anti-drone stuff and land-based anti-missile stuff, they don't seem to be making too much out of that at the moment. And so when you invest in them, you're kind of taking a risk there on if they're going to actually be able to start selling this stuff to people or if they'll get drowned out by the competition. They do have a partnership with Rheinmetall though, for the chess business, so that's got to count for something. But overall, really, they're more about Navy at the moment, and the drone stuff's still kind of a little bit speculatory in terms of if they really are going to be able to accelerate future growth selling into these areas. In terms of their actual net income history and net and balance sheet, they look extremely good. In fact, they have basically the best figure of any defense stock that I've looked at. They're trading in this neat channel and above this moving average here, but I think they're quite comfortable to own as long as they're trading within this channel. They've been very successful in naval products and also in services for the UK Army. They offer exposure to anti-drone warfare stuff, but the jury is still out as to whether Cohort are going to be able to make a massive success out of their chess business which will be more focused on land-based anti-drone warfare. So that completes my video. I hope you found it useful, and speak to you at the next one. I do videos like this one just for fun as a hobby. It's for entertainment purposes only. Always consult a qualified financial advisor before making any investment decision.